Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 24th of September 2019 and we're going to address a controversial question. Well, two in fact. The first, should one go short silver and long gold? And the second, have gold and silver highs already been reached this year? Let's investigate. One of the many objectives we have for this channel is to present information which may run contra to that which you, our subscribers and listeners, believe, and sometimes contra to what we believe too. The reason being is that in politics, economics, business, and life in general, there are times when things are not what they seem. Sometimes information is deliberately falsified. Sometimes it's just inaccurate. And sometimes the majority thinking drones out the minority thinking, even when the minority could in fact be right. So we believe that occasionally it is helpful so that we all don't just restrict ourselves to our own self-indulgent bubble, that we also listen to the views of others who may actually pose a different picture or analysis to that which we may draw ourselves. Now, such an opportunity appeared on Bloomberg today, and we think it's actually worth airing, because we have seen other technical analysts paint a somewhat similar picture, though not many, and they are by far in the minority for the moment. Now, in today's Bloomberg News, Peter Borish, the chief strategist of Quad Group, advocates that now is the time to go long gold and short silver. Now, we've put a link in the description box below to the Bloomberg video. It's very short, but certainly worth watching. Now, Peter argues that generally, silver trails gold until the end of the cycle, which is when it exceeds its growth rate and percentage-wise advances above it. Something which most silver stackers and pumpers tend to agree on. However, he claims that silver has trailed gold by around 10% for much of this year, and then in September, exceeding it, peaking on the 4th of September to $19.65, where it stood approximately 5% ahead of gold. He then makes the comment that silver pulled back, rose again and pulled back again, suggesting that one complies with the old adage and market philosophy of buy on the first dip and sell on the second. He maintains that silver has now reached its zenith, as it's more economically sensitive to negative market growth, and that one should swap out of silver and purchase gold. Now, let's be clear. We are not necessarily advocating this, as we are holding both, and will continue to do so. We're not day traders anymore and believe more in the physical markets than the paper ones. But Peter is not entirely alone in this contra thinking. Przemysław Radomski, a doctor of philosophy from Warsaw School of Economics and founder of Sunshine Profits, who is described as a financial scientist and successful investor, and is a CFA charter holder, also wrote an article today, this time for FX Empire. We put a link in the description box below. Now, this is what he quotes in his article. Gold moved higher last week, but it didn't entirely erase previous week's declines. The volume was relatively low. The last time that we saw relatively low volume during a weekly upswing was in mid-August, and that week's closing price was the top, most likely ending gold's 2019 rally, in terms of the weekly closes, that is. Just because gold formed the major top, it doesn't mean that it will now decline in a straight line. Conversely, please note that even the 2012-13 decline had periodical 1 to 3 week long corrections. The RSI above 70 confirms gold's very overbought status and the need to decline in the following weeks. The sell signal from the stochastic indicator remains intact as well, pointing to lower gold prices in the following weeks. Silver did very little last week, so everything that we wrote previously on the above chart remains up to date. Silver invalidated its temporary breakout above the 61.8% Fibonacci retracement level based on the 2016 to 18 declines. It additionally formed a huge reversal candlestick, and it took place on enormous volume. This is a very strong bearish combination for the following weeks and months. The RSI moved below 70 after being extremely overbought. Since 2007, all but one, the 2010 rally case, when it happened, were followed by huge declines. The 2008 top, the 2011 top, the late 2012 top, and the 2016 top were all preceded by this development. Sure, silver's recent rally may appear bullish at first sight, but the history tends to rhyme. This time it's unlikely to be different, and silver is likely to do what it's almost always done in these circumstances: decline heavily. Now, that's the end of the quote. He's not necessarily advocating gold over silver or vice versa, but he is advocating that the highs for these precious metals has already been seen, at least from a technical point of view, and that the future movements will be downwards. Now, of course, we also saw silver jump yesterday over 60 cents and is more or less holding its position so far today. At the time of writing, it stands at $18.54, while gold yesterday rose just $8 and again is holding a similar position, currently standing at $1,520. Now we know that to many listening today, to feel that gold has reached its peak at 1546 and silver at 1965 is unbelievable, considering that we are facing a lower interest rate environment, global economic slowdown, equity markets close to all-time highs and appearing expensive, and much geopolitical turmoil such as the trade war with China and a pending potential military war with Iran ahead of us. However, this is the position that two technical guys advocating, which is contra to the views expressed by many others, but we think is at least worth considering. Now, many of our listeners know that earlier in the year, we assessed that $1,500 gold and $1,750 silver would be the peak, and we revised this slightly in terms of changing circumstances. However, we still forecasted that by the end of the year, we would expect gold to be no higher than $1,500 and silver no higher than $18, and quite likely lower than these figures. Now, of course, time will tell, and we fully accept that if there is a military strike against Iran, then much higher prices will occur. Of course it will. But if everything steadies and the greatest fears do not come about, then perhaps this gold and silver bull market many were expecting, with prices going to the moon, may not actually come about after all. Tell us what you think. Are these two individuals wrong in their assessments? Has gold and silver reached their highs, at least for this year? Should one ditch silver and buy gold instead, or vice versa? After all, the gold-silver ratio is still, in historical terms, relatively high. We'd be interested in your thoughts and reasoning behind them. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.
Glory, glory, hallelujah.